I will take you through our performance from this quarter, September ending 30th, 2025. And we have uploaded the presentation on the stock exchange. For your convenience, I will call out the slide numbers, whichever one I'm talking. And in this group, together with me, our CFO, Ajay Singh, and our General Counsel and Company Secretary, Poona, and our Head of Communications and Government Relations, Seema Siddiqui, are here with me. You all know on September 30th, India reached a historic milestone as the country's total installed electricity capacity surpassed 500 gigawatt, reaching 500.89 gigawatt. It reiterates the growing energy network in India and an increased focus on advanced grid technology, digitalization, storage, and integrated solutions. At Hitachi Energy, we understand the significance of these evolving dynamics, and it's also reflected in our operational and financial performance. So I'm starting with the presentation and moving to the slide number 3, which is our license to operate, that is safety. Safety is a fundamental to our license to operate. In Q2 FY26, the focus on safety continued to keep the injury frequency rate under control through timely prevention actions and several initiatives across our factories, project sites, and offices. This is reflected the appreciation letters and awards we received from our customers and stakeholders for adhering to the highest safety standards as a leading industrial products at our project sites. At Hitachi Energy, we prioritize and remain committed to our employees' well-being with a special focus on mental health. Towards that end, we introduced the CAN app this fiscal year, which offers online personalized support for mental well-being. Furthermore, during the quarter, we organized several health initiatives, including multiple awareness sessions on first aid and basic life support, emergency preparedness, so on and so forth in that. Moving to the slide number 4, which is also another key driver for our growth, is the sustainable target, ESG target. Sustainability, you all know, is a key part of Hitachi Energy's business strategy and fits into our company's purpose, thus inspire the next era of sustainable energy. The company's sustainability strategy is built around 3 interconnected pillars, which is planet, people, and principle, each working together to fulfill its purpose. We have set ESG target for 2030. We have also released 2030 strategy of our ESG targets. Under the planet pillar, we are confident of achieving more than 70% reduction in CO2 emissions in financial year 25-26 in our operations from our targeted 50% reduction compared to our baseline year of 2019 emissions. Similarly, we have achieved 69% reduction in waste disposed of in landfills or incinerated in FY24-25 and aim to further reduce in the financial year 25-26. When it comes to the people, we remain committed to safety and ensure diversity across our workforce. Currently, our gender diversity stands at 11%, and we are confident of meeting our 16-18% mark in the coming years. Our principal strand is committed to ethical behavior and responsible governance in all aspects of our work. At Hitachi Energy, we remain devoted to zero incidents when it comes to integrity. Moving to the slide number 5, and I'm sure this slide you know better than me, but I still like to say a few things on this particular slide. As you all know, according to the World Bank, India's growth outlook looks positive with a revised forecast from 6.3% to 6.5% in FY25-26. World Bank has further rated India's GDP growth of 7.8% as exceeding expectations for the first quarter of 25-26. The GST 2.0 reforms, along with the strong domestic and resilient external sector, have played a crucial role in sustaining this growth momentum. During this quarter, the trade deficit receded slightly. Despite several positive indicators, uncertainty looms over U.S. tariffs, but we are hopeful, like all of you, that it will be resolved soon through the dialogue which are on. In terms of investment, India continues to make a significant strides in the clean energy sector. In the first half of 25 alone, the renewable energy sector attracted investments of nearly 1 lakh crore. Additionally, the sanctioned 2.4 lakh crore of 500 gigawatt transmission plant to link renewable-rich states with the demand center shows the country's growing confidence and commitments to sustainability. If I move to the slide number 6, the company continues to maintain its strong growth momentum. In the quarter ending September 30, we secured a total orders of 2,217 crore, up 13.6% year-on-year, and our revenue stood 1,915.2 crore with a year-on-year growth of 23.3%. The effective execution of good margin orders, sustained operational excellence, a good product mix, increased export momentum, and a lower base in the corresponding previous quarter, the company reported a significant year-on-year growth in profit before tax and profit after tax. The profit before tax and profit after tax recorded 4 times year-on-year growth, 399.8% and 405.6% respectively. During the quarter, the company achieved the highest ever order backlog of 29,412.6 crore, creating a revenue visibility for several coming quarters and years. Key orders this quarter included automation solution for state transmission companies and HVDC connections, a 220 kV air insulated switchgear, air stations for 250 megawatt solar battery energy project in Bidar, along with 420 kV GIS and 220 kV POS for other solar projects, wind projects with 400 kV air stations in Nandedu, and many other industrial projects such as GIS stations for a green steel plant in Paradeep, aluminum plant expansion at Mahan, and greenfield steel plant at Jaipur, and for rail locomotive EMU transformer for Indian Railways and Vande Bharat, etc. Moving to the slide number 7, as a technology leader, we continue to drive innovation and reinforce the nation's energy security through impactful initiatives. This quarter, we commissioned several significant projects covering renewables, data center, and industries. I would like to share a few highlights. In the industry segment, we commissioned 220 by 33 kV AIS package in Rajasthan for a leading cement brand, and 220 kV GIS substation in Maharashtra for a leading data center provider. In renewable, we established a 150 megawatt EBOS in Rajasthan and 220 kV AIS substation installation for 200 megawatt wind power evacuation in Tamil Nadu for a leading renewable energy company. For all these commission projects, our teams were responsible for designing, engineering, manufacturing, supply, erecting, testing, and commissioning according to the defined scope of work. If I move to the slide number 8, at Hitachi Energy, we remain committed to leading with purpose and creating a positive impact across the industry and society. Through our flagship platform, Energy and Digital World 2025, we connected with our esteemed and partners across Chittagong, Bengaluru, Jharsuguda to accelerate collaborations in close to our customer places. Additionally, successful completion of NABL reaccreditation by our power transformer factory reaffirmed our commitment to quality and eco-conscious practices. Our Dodabalapur facility has earned special recognition for its sustainable practices at the CI Karnataka ESG Summit, an achievement that we are proud of. Also, I am pleased to share with you that our first batch of women in engineering graduates has secured 100% employment through our latest community initiative in education. 1,350 students in Thandavapura and Nanjangud near Mysore will benefit from solar-powered smart classrooms and libraries there. We continue to lead industry conversations through key forums in this quarter, whether it is the SIGRE and IEEE and also the CI, etc. Moving to the slide number 9, here I would like to provide some more color on the orders received this quarter. In terms of segments, renewable, wind and solar, and rail metro contributed significantly to the order book, followed by industries. In Q2, both renewable and rail and metro experienced a growth of 40% and 61% respectively, whereas the transmission and data center segment witnessed a decline, 43% and 50% respectively. But we believe it's a timing issue, it's a temporary phenomenon, and we are very positive about both data center and transmission because of the large project is done. Otherwise, there's a huge amount of pipeline is there. The order mix is shown on the right. In the graph, you can see that the projects have taken the lead in the segment, whereas utilities, the direct end users, are clear winners for the sector and channels respectively. Moving to the slide 10, our growth levers, that is service and export. During the quarter, exports contributed, attained 59% year-on-year growth. Diverse geographies and industries we served helped sustain export momentum toward order book. The company received export orders from utilities in Europe, data centers in Southeast Asia, and renewables in Middle East and North America. On the service front, it maintains its high single-digit contribution to the total order book. Some of the key service orders came from utilities and industries, including an air core reactor for an HVDC project, GIS and AIS extensions, repair and retrofitting, and first iconic order in India, which is a game-changing SF6-free technology, what we are deploying it in India for the first time. So moving to the next slide, I request my colleague, our CFO, Ajay Singh, to take you through. Over to you, Ajay.
Thank you, Venu, and good afternoon, everyone. I hope you all are doing well at your end. So let me just take you through the Q2 financials and performance that has happened. So if you see orders in this particular quarter, we did 2,217 crore, so which is 13.6% growth when I see year-on-year. And even if I remove the large orders of the previous quarter, I see there is a growth of 28%. Revenues, if you see revenues, we closed at 19 and 15, crore for this particular quarter, which shows a very good, growth compared to Y-on-Y 23% growth, and compared to basically quarter-on-quarter 25% growth. So with the support of very, good revenue, along with the execution of good margin orders, better product mix, operational efficiency, and better exports, our PBT in this particular quarter is 352 crores, which is 18.4%. And PAT is 264 crores, which is 13.8%. Operational EBITDA, we closed at 291.6 crores, which is 15.2%. So overall, I will say that this particular quarter is fairly better compared to the previous quarter. And order backlog, we are having roughly 29,400 plus, crore of order backlog, which provides a very good visibility for the several quarters. If I come to the next slide, slide 12. Here, basically, I would like to give you an overview a little bit more in details, where you see we are able to also review the cost structures also. The revenue, if you see, out of the total 19 and 15 crores of revenue, we have other income of 69 crores. And this other income is basically coming from the interest, deposits that we have done, the interest which we have gained roughly 69 crores. And also, in this particular quarter, we have a exchange gain of 12.8 crores. Personal expenses is 8.1%. Other expenses, if you see, based on the overall efficiency that we gain with the better, revenues and also the overall cost structure, we closed 16.9%, which was in the previous quarter 22.7%, and that has also supported in the bottom line development. Depreciation, as you are all aware, we are investing, so depreciation is slightly increased compared to the previous quarter, and finance cost, it is a bare minimum because we are no more having any debt at the moment. So overall, with all these improvements and all these, cost structures, overall we see that we closed the profit for the quarter is 13.8%. With this, I hand over to Venu.
Thank you, Ajay. And moving to my last slide before we open it up to Q&A. And that's our priorities for the remaining part of the financial year and also coming years. As we closed our second quarter, explained by our CFO, which is a very good quarter from our standpoint. And Our focus remained on the two objectives, maintaining high growth momentum and enhancing our overall efficiency in all spheres of our work. Maintaining our leadership in core segments such as utilities, HVDC, transmissions, industries, infrastructure, etc. in that. And we continually strive to capitalize on emerging opportunities in new segments such as the data center, industries, and refine our strategies to leverage opportunities in service, export, and digital segments, and which you have been seeing this, how we have been driving this growth for the last several quarters. Our focus will remain on strengthening the service business in India, and the company will continue to drive productivity with an emphasis on operational excellence to improve productivity, quality, and opportunities under the One Hitachi umbrella. On the business front, consolidated efforts will be made to leverage the large order backlog for revenue accretion and focus strategy for the utilization of the capital raised during the QIP. As we speak, a lot of projects are under execution, a lot of CapEx projects under execution at various stages of completions, and we see the traction of some of them coming online from the second half of the next year onwards. With the safety embedded in our culture, our commitment to fostering a strong safety-first work environment remains steadfast. At the same time, we continue to invest in expanding our capabilities for a sustainable growth, whether through upskilling and cross-skilling our workforce, which is extremely important for the energy transition-related thing, or by strengthening our operational footprint to inspire the next era for sustainable energy future. So, ladies and gentlemen, with this, I close my presentation and request the operator to open the channel for the questions. Thank you.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and 1 to ask a question. The first question is from the line of Umesh Raut from Nomura, India. Please go ahead.
Thank you so much for this opportunity. Good evening, sir. My first question is pertaining to our CapEx timeline. If I look at our prospect document for fundraising, that is QIP, it mentioned that for FY26, we were planning to deploy closer to 750 crores in the CapEx and about closer to 720 crores in FY27. If I look half year, I think we have done closer to 67 crores of CapEx. So just wanted to understand how this CapEx ramp up will happen, say in second half FY26 and then in FY27-28. That is my first question.
Okay, thank you, Umesh. Thank you for asking this question. I think it's very, very important question for us. So for us also, the CapEx projects going on stream in line with our timeline, in line with our budget, cost, etc. is extremely important. We have a dedicated teams working on that. And as we said in the beginning of our document, 750 crores is what we're going to spend in this year in terms of, we may not be completing 750 crores worth of the projects, but we will be, close to that range. I think we still see that, traction of coming very close to that. And also similarly in the subsequent years.
Understood. Okay. So three large projects that we have in terms of backlog, which is one on the domestic HVDC program side and one in the Australia, again, more of an outsourcing package as a part of larger HVDC project. So just wanted to understand, would there be any delay in terms of execution because of slight delay in terms of capex timelines, or how should we look at in terms of completion timelines for these three projects respectively?
Okay. First of all, the capex, as of now, there is no delay as per our schedule. They are going in line with the schedule, almost all of those. Okay, and whatever the projects we have booked, we have seen everything in our capex. Some incremental capex has to come in for some of those products which are required for that, and we see that is very much on track. So I don't see any delays on account of those things.
And scheduled completion timelines for three projects which I mentioned?
It is varying from customer to customer, ranging from anywhere between 48 months to 54 months. So we are very much within our schedule and doing that. And as we speak, and all these projects you've named about, we are completing the engineering phases. We are doing some of the component testing. All those things are going on.
Understood. So my last question is pertaining to other expenses, where we have seen 7% decline on year-on-year basis, while our revenues went up by about 18% for the quarter. So any particular reason for drop in other expenses or any one-off here?
Yeah, I'll ask our CFO Ajay to talk on this.
Yeah, so I just in my initial commentary also I mentioned the other expenses has come down. Mainly if you see, I will say that we have achieved the operational economies in this quarter, and that is mainly driven by the containment of the costs and also supported by the higher revenues. But to give one specific example, like in the last quarter, we had a higher royalty expenses, and you are aware we have been telling that our royalty expenses are generally dependent upon the previous quarter revenues. So the previous quarter, the prior quarter revenue is higher, so in the last quarter the expenses royalties is higher. But based on the last quarter revenue, this quarter the royalty expenses were lower. So that is also one of the major reasons where it has also come down. But overall, we have been telling that we will be hovering around, let's say, around 20% level.
Understood, sir. Yeah. Understood. Sir, last one clarification. If I look at slide number 9, the figures which are mentioned here, it looks like Q2FY25 figures are basically for Q2FY26. Is that the correct assumption? Because I think if I look at following slide, I think on the services side, Q2FY26 was on a declining side, while in the first side, that is on the 9th slide, I think it is increasing for Q2FY26.
No, I think that what you're saying, the slide on the 9 is...
So I think the figures for Q2FY25 are basically for Q2FY26. So it's mentioned in reverse way?
Yeah, that is... If you see here, what you're talking about in the 10, Q2FY25 in the left-hand side, Q2FY26 in the right-hand side. That's only the representation standpoint, but otherwise everything is okay.
No, but sir, services contribution in orders is basically...
Yeah, the services is down, no?
So it has increased for Q2FY26 in the slide number 9.
No, slide number 9, where did we say that?
From 7% in Q2FY25, that has gone up to 12% in Q2FY26.
We check on that. Okay, thank you.
Yeah, sure. Thank you.
For pointing out.
Thank you, Umesh. A request to all the participants, kindly restrict to 2 questions per participant and rejoin for a follow-up question. The next question is from the line of Parikshit Kandapal from HDFC Securities. Please go ahead.
Sir, congratulations on a great quarter, sir. So first question is, in the order book...
Sorry, your audio is not clear. Can you speak a little louder, please?
Okay, I'll do
maybe
that.
Close to the mic, yeah? Please come close to the mic.
Is it better now? Can you hear me now?
Yeah, it is better. Yes.
So just wanted to understand out of the total order backlog right now, so what is the base orders, excluding the HVDC, what will be the order backlog?
So I think, we have at least close to 10,000 crores. We'll have a base order backlog.
Okay. Understood, sir. And in this quarter, sir, if you can help us quantify out of the total order inflows, how much was the export order, and in the total order book of 10,000 crore base order book, what will be the export order backlog?
No, we don't make it like that. We said our exports we are telling you in the overall basis is the 25%, okay, and it's varying from 25% to 30%. We don't have a large backlog exports. Most of the exports are at a quite short cycle, except for the Marinus order which we have booked in. But most of the exports are quite short cycle thing. So it's fairly you can take around 25%.
Okay. And this is the last order on the related party. So any large orders expected from the parent company and the related party, like we have seen some of our peers getting orders from the parent entities or related parties. So anything planned for this year? Any thoughts there on the parent side where we can get orders?
So Parikshit, we have been saying consistently that our main focus, unlike some of other companies, is the domestic market. We are expanding our factories. We are increasing our localization. Is primarily to serve the market. It's not that we cannot do it. So we see a huge amount of tailwinds in the domestic market. Today, our challenge is our ability to supply that. So that's where we are doing it. We are expanding it, and as you can see, the new opportunities like a gigawatt scale of data center requires a large amount of transformer, GIS, automations, etc. in that. So it's quite a big opportunity pipeline for the domestic market, and the focus is that. Having said that, we have been saying consistently that our exports we've been concentrating exports, and we brought exports from 15% to 25% on an overall basis, and we would like to remain in that range bound, few percentage this way, that way. But that's what is the thing. It is not that we take an export order from our parent and compromise on the domestic market. That's not what we want.
Okay. So just one thing for Ajay sir. Sir, this Adani order is over, or is it like still some more execution left? I mean, in this quarter, was it a significant part of the execution?
Yeah.
So generally, we do not basically talk on those particular lines.
But is the order completion over now, or is it still pending?
Not yet. That is yet to get completed. Not yet.
So in this year, by this year end, we'll have that order completed, like by this year end?
Hopefully, yeah. Hopefully. Yes.
Okay, sir. Sure. Thank you.
Thank you. Next question is from Harshit Patel from Equirus Securities. Please go ahead.
Thank you very much for the opportunity, sir. Sir, just a question on our Marinus Link products order that we had received from Australia. So, what percentage of execution is completed for this order, and by when we will complete this entire order? If you can give us those details.
No, I think it's a very small percentage right now, but we will be completing it in the next 36 months or so.
Understood, sir. Secondly, could you give us a sense on what kind of margins we are realizing?
Harshit, sorry to interrupt you. Your voice is coming muffled. Can you speak a little louder, please?
Is this audible?
Yeah.
Sure. Thank you. Could you also give us a sense on what kind of margins we have realized on this Mumbai HVDC project, and similarly on Marinus Link also? We don't want the exact numbers, but if you could give us a flavor on how much higher these margins are vis-a-vis our standard base order related margins, that will be very nice.
So, Harshit, again, this question has been in the previous quarter also. We have been saying consistently that we don't disclose a project level or a segment level margins. And all I can say you, if you give a little bit of a flavor and color on a qualitative basis, some of the projects and many of those projects, we always look at in a risk and reward basis, and it should fit into our margin corridors, and what are the projects we won or what are the projects we are aiming to be, and they are all within our margin corridor.
Understood, sir. Just lastly, if you can update us on the HVDC project pipeline, what kind of projects will be tendered or awarded in the next 3 or 4 quarters?
So the pipeline, all of you may be knowing it. There are one project is the tariff-based bidding is over, and we hope that should get finalized in this financial year. On top of that, there's another 6 gigawatt of LCC project which is likely to come out of NIT, and there's a good chance that can also get finalized in this financial year. Both are in this financial year. Okay. So again, I've been saying, let me give a big picture. You can also go to the CEA website. The details are there. and they're also upgrading it continuous basis as and when the new update things. So, and this I have been saying consistently, not today, but at least 3 years back. And a country like India, to manage this kind of complexity arising of such a huge amount of renewable and with a lot of electrification, with gigawatt scale of data centers coming in, it needs this kind of technologies coming in that. So previously I've been saying, 1 project per year, and I also said 2 projects per year should come, but it is a matter of, 2 to 3 projects per year is required going forward in that. They will come up for the bidding. So those are the things that there could be a large project. There is always a timing delays, etc. Sometimes there might be some challenges in finalizing in one go, but that's what I see, 2 to 3 projects per year for at least next couple of years.
That's good, sir. Thank you very much for answering my questions, and all the best.
Thank you. Next question is from Shivam Kapoor from Jefferies India. Please go ahead.
Hi, sir. Thank you for the opportunity. I just want to ask you about your gross margin. So we've seen, significant expansion in 1H, almost, over 550 basis points. So I was just wondering, what has driven this gross margin expansion? You've been clear on overall EBITDA, but specifically on gross margin, what has driven this expansion? And, are the current levels of 40+% gross margin sustainable going forward?
So maybe let me answer a thing, and then Ajay will also join in that. Shirom. So we have been saying this, not today, we have been saying consistently last 2 years that we are working on a strategy which is a very long-term strategy, very sustainable strategy, both on the growth as well as on the bottom line strategy, and we said we will take into double-digit EBIT margin corridor, and then we sustain those things in that. So we also said what are the levers available for us. The levers is that one, we are growing higher than we could have the growth, while the growth will not give you the same kind of fixed cost, and then we also have exports will give a better margin, better gross margin, and then we're also working on the pricing excellence, etc. in that. And the last one is very important is our service strategy. We have created a dedicated service business unit because we have a huge amount of install base, and we would like to leverage and then improve on both top line and bottom line. And that's what you can see in the play over a period of time in that. Ajay?
No, I think we have already covered. So basically, if you talk about this particular specific quarter, as I also already spoke, this execution of the better margin orders, and then the better product mix. So these two things combined, is giving us and coupled with the exports. So these are the 3 levers where we see the margin has come from. And as Venu mentioned, going forward, we are quite clear about how we want to drive this, and definitely our aim is to drive this in the right direction.
Noted, sir. And thank you. That's very helpful. So just to summarize, these are part of a long-term strategy and can be sustainable going forward if the strategy continues to be executed. So noted, sir. Thank you. Secondly, of course, post your QIP, you have a large cash balance. You earned about 120 crores of interest income in the first half of the year. But as you deploy your capex, is this also another? How should we look at this over the next couple of quarters and FY27? Can this level of interest income sustain, or do you expect it to come down? Is this just a one-off in the first couple of quarters this year?
Yeah, just now Venu explained that we had a very slow start as far as the deployment is concerned. But then in the next 2 quarters, our expectation is that we'll pull up, and whatever we have declared around 700 plus, is what we are aiming. So with that kind of deployment happening, definitely I see the reduction of the interest because that will get deployed. So that is a near-term thing that we see at the moment.
Okay, got it, sir. Thank you so much, and all the best.
Thank you.
Thank you. Next question is from Shubhadeep from Nuvama Wealth Management. Please go ahead.
Good afternoon. Thank you for the opportunity. So my question is something related to margins. I'm sorry if this is a repeat. I missed the early part of the call. So I understand that, you've been highlighting that starting from fourth quarter of FY26, we'll be entering double-digit EBIT margins. Does that guidance still stand? And is there a possibility that between now and fourth quarter, there could still be some retraction in terms of margins because of some older legacy projects?
Sorry, what projects?
Older legacy.
Oh, okay.
Older projects which might still be left in your order book. Could that still impact margins, let's say in 3Q?
I think our guidance remains. We said that we will enter double-digit EBITDA margin, and we have entered much ahead of our own target. And then we also said that we'll sustain, and then we'll also improve from that, and that's what you are saying in that. And this guidance we will not say from where we go, but what we are saying is that it is double-digit. It could be few percentage this way, that way, but on an overall basis, if you take as a year-on-year basis, so it will have a double-digit EBITDA margin.
Understood. But any of the older legacy projects still left which can impact margins, let's say for the rest of the year?
Our overall portfolio is very, very robust and a good gross margin, and we do not see any of those things. Having said that, there could be always some external event, right? So we are in such a uncertainty of geopolitical things like that. Something can come, but to the best of our knowledge, we have a very solid order backlog and very good portfolio of our order backlog, which is executable and sitting with the good gross margins.
Understood, sir. Thank you so much.
Thank you.
Thank you. Next question is from line of Sitaram Agarwal from Treeline Advisors. Please go ahead.
Hi, thank you for the opportunity. I have two questions. First question is, is there any sense of, pricing trends that you can share, let's say from 2023 to 2025, as in what was the pricing for, projects that you were winning in 2023 and how they've trended last year and what's the current trend?
No, thank you, Mr. Sitaram, but unfortunately we will not give you those kind of trends because it's basically for our own thing. But I must tell you that, we said we are predominantly working on to support our domestic market, and 1/4 of what we produce, we also send exports. So in the domestic market, despite the supply and demand, there's always an affordability challenge, right? So it's not that, whatever price, you want, you can get it. It's not feasible, and the project is not going to be viable. You may get, once in a while, better margins, but we are also looking at a lot of localization. That's very important in that. Today we produce almost 75-80% of our globally what we produce locally here, and that is what is also very important for us to get into these kind of things.
Right. Okay. Thank you. And my next question is, I know you've highlighted about, quantified some of the data center opportunities in the past, but if you were to take this example of the 1 gigawatt data center that Google has announced, what really would be the opportunity for transformers out of the entire capex of $14-15 billion that they've announced? And more importantly, is there a split of, are these all high voltage transformers, or is it going to be a mix of high voltage, medium voltage, low voltage? Just a broad indication of the quantum and the kind of transformers that would be needed for these data centers.
Absolutely. I think the data centers are completely, redefining. We used to have a data center of a 10 megawatt, and then they went into 40 megawatt. That time they were calling a hyperscale. And then they said AI-ready data center, which is 100 megawatt. And now we are talking about a gigawatt scale data center, right? Which is a super hyperscale data center. And we have been saying also during hyperscales and AI-ready data centers, for our portfolio of Hitachi Energy, which is grid connection, substation, automation, and all ranges of the transformer, which is high voltage, low voltage, medium voltage, dry type transformers, And our addressable market of every data center capex is in the range of 15 to 20% of data center capex. So depending upon the size and scale of, and depending on the model, business model, what they deploy, it might vary, but that's where is the thing, 50-20%. And we believe that that's going to be there in the gigawatt scale data center as well.
And is there any indication of how much of this would be high voltage out of the 15-20%?
No, 15-20% is our addressable market. Hitachi Energy addressable market.
Right. Okay.
Yeah.
Okay. Thank you.
Thank you.
Thank you. Next question is from the line of Balchandra Shinde from Motilal Oswal. Please go ahead.
Hi, sir. Am I audible?
Yes.
Sir, two questions. One on HVDC pipeline. If you can provide insight that in next 1 to 2 years, how many HVDC projects are expected to be tendered? And also there is one thought process going on that because of renewable BESS technology will come into play, relatively HVDC capex requirements will be lower. So your insights on that would be good, great enough.
Okay. So thank you. I think I have already answered this question, Mr. Balchandra. But just for your sake, I can do that. HVDC pipeline in the near term, that one project is already completed, the tariff-based bidding. So it is in the market, and then in addition to that, there's another LCC project of 6 gigawatt is likely to be tendered out. So 2 projects in this financial year, and then we see in the next year anywhere between 2 to 3 projects coming out for bidding. So that's what is the thing. And I also said in the call that previously I used to say 1 project per year to come up for a bidding. Now I revised it to 2 projects per bidding. But anywhere between 2 to 3 projects are required to manage the complexity arising of such a huge magnitude of renewable and electrification is what you see in our country in that. So regarding your second question on the BESS versus HVDC, I think this is not one against the other. Both the technologies are required to coexist in that. So battery energy storage cannot compete with HVDC or vice versa in that. So both the technologies are required for our energy transition. And as you have seen, the SECI's mandate right now is the 10% of the renewable. They need to have energy storage built in the project going forward. If that is in the right direction in that. So for your information, energy storage, Hitachi Energy is one of the key players in energy storage itself. And we do have our converter, PES, etc., which are very, very critical equipment for the energy storage. Thank you.
Got it. And sir, on the data center side, again, one of our peer is not expecting that much growth, at least for next 2-3 years. But what is your take, how one should see India? Because India has a really good edge against any other country. That surplus power in solar hours and all those things are really good thing for data centers. What is your take, how one should expect growth prospects in data center market?
I can tell what I can have been saying, but then the only way is to wait for a couple of more quarters, then you see that how the trend is happening in that, right? So the data center is quite big market going to be, and we have seen this in other parts of the world already. It's quite a big market, which many of stakeholders are not seeing that. For example, how much of load the data center is required, still it is not being factored in the Central Electricity Authority. They are looking into it. That, for example, Singapore, which is right now 7% of the whole Singapore's energy consumption goes to the data center, and they are saying that 30% is 2030, 2032. So that's the kind of requirement it will drive in. Data center has the 2 elements. One is the data center itself will create an opportunity for a company like Hitachi Energy, and the second one is data center drives the load growth. So huge load growth. It's not a normal load growth, it's a huge load growth, and that will be a further secondary investments in the, again, generation, transmission, etc.
Got it. Thanks, sir. Thanks. I'll come back for further questions.
Yeah.
Thank you. Next question is from the line of Mohit Kumar from ICICI Securities. Please go ahead.
Yes, sir. Good afternoon, and thanks for the opportunity. Sir, my first question is, given that we already have we are executing approximately 3 large HVDC orders as of currently, do we have the capacity to take 1 or 2 projects further in near term? Or appetite?
Yeah. As I said, we have been always ahead of the curve. We have been seeing this much ahead of many of the industry players. So when we started our factory in 2021, there was no pipeline there. But we had a strong belief and conviction that, we wanted to start this to address that, and that's what we are seeing that. And considering all that, we have already started the expansions of many of our projects. So we are putting almost 2,000 crores capex is basically to address those future requirements as and when it happens, whether it is in Chennai, whether it is in Bangalore, whether it is in Mysore, whether it is in Baroda. All those things are considering those things. So we are not constrained with any limitations at this point in time.
Understood, sir. My second question is, sir, is it possible to update us qualitatively on the progress of the Khavda HVDC and Bhadla HVDC project? Are they tracking your expectation in terms of progress?
As of now, yes. Yes. Just to answer, yes.
Understood. The last question, slide number 9 of your presentation. The order inflow from the transmission has declined by 43%. Of course, I understand that the base quarter has Marinus order, but still, was there something odd about the quarter that the order finalization has got postponed?
Order finalization has been there. Some of the transmission, like a transformers, etc., which is going to the transmission. So you are able to fix into the delivery schedules. Those things are also play a role. It's not about the sector down of that. It is our orders were down in that particular quarter. But again, I also clarified, it's also timing for us, and we don't see anything. Our pipeline is very strong and robust, and we are able to, fit into what fits into our schedule.
Understood. So it's fair to say that the order inflow opportunity is very strong for the next 4 quarters. Is it right to say?
The pipeline is very strong.
Understood, sir.
Understood.
That's very helpful, sir. Thank you, and best of luck, sir. Thank you.
Thank you. The next question is from the line of Sagar Gandhi from Invesco Mutual Fund. Please go ahead.
Yeah, sir. My question pertains to execution. So while we have done excellently in terms of order inflow and now in margins also, H1 execution has been, 15% growth. So can you qualitatively give us a direction on execution ramp-up from here on?
Execution ramp-up, but as I said, we have 29,000 crores worth of order backlog, right? So those things we need to execute, and on top of that, we are adding more capex, and you know that, what is our asset turn ratio of those previous things. Even if you take a low asset turn ratio, we'll add into the revenues.
Sure. So, qualitatively, it looks substantially better from here. Is that understanding correct?
You know very well that we don't give you any forward-looking statements. You can make your own assessment. All we can say is that we have sitting in a strong order backlog. That's number one. We are expanding our factories, and then we are also looking at our exports in the service.
Sure. Thank you so much, sir.
Thank you. Next question is from line of Mohan, individual investor. Please go ahead.
Yeah, thanks for taking my question, sir. We recently had a global investor meet in London, and there was a table put out which stated that Hitachi Energy, from a $16 billion revenue in 2024, hopes to be a $33 billion revenue company by 2030. But more importantly, the margins, which were 11% in 2024, were expected to be in the range closer to 20% is what is being put there. Now, presumably, this is something which we can go with because our current margins are higher than the global average margins for this quarter as well. So, would it be a fair range to go with?
No, thank you, Mr. Mohan. Again, I'm coming back to the same thing. We do not give, guidance on the longer term basis in that. Again, let me give a qualitative basis. We have been saying consistently, and then we are executing what we are saying, what we do. Okay, so that's what you need to what it matters. So what we are saying is that we have taken a lot of actions much ahead of the curve in expanding our factories, localizing our equipment, bringing the technology and localizing it so that we are able to offer to our customers at the price point that is required. That's the number one thing in that, right? And that will add both scale as well as various other things in that. Yeah. So we are going consistently much higher than the market, and we have demonstrated for several quarters now, and we continue to do so in future. Okay, and that will we are sitting right now with a huge order backlog, and that order backlog will give a huge visibility. And then in addition to that order backlog, we are growing higher in the market, and then we have our exports will play a major role, and then we also have our service play a major role. So if you add all these things, then you can make your own assessment.
Yeah, sure, sir. And the next question was as regards the Leh HVDC order. There has obviously been a delay or cancellation. If you can share what really happened and why we didn't bid in the initial instance, if it can be shared, it will be interesting for us to know.
No, it's not about why we didn't bid or not. In fact, our customer has given us a paid order to us. So we have done our thing and then submitted our report. Based on that report, only then certain particular type of technology will go in there, and that's what we have submitted to our customer, and then it's up to customer to take a decision. So even if they are going, it's quite many phases will happen. Even if, for example, if they have to go for some immediate reasons to evacuate, if you have to go to AC, but again, it is not a one technology play there. It is a combination of various technologies have to play to manage the evacuation of such a large scale renewable there. So it's yeah.
Okay. Fair enough. Thanks a lot, sir.
Maybe one last question. Operator, maybe one last question.
Sure, sir. Next question is from line of Anupam Goswami from SUD Life Insurance. Please go ahead.
Hi, sir. So my first question on what's your plan on the export side? What is the current order book or your vision? Where do you want to scale up?
No, I think we are very consistent in what we have been saying, Anup, that our exports right now is around 25% if you take out the large project HVDCs, etc. like that, okay? And we have one large export project also there. So basically, if you see both sides, if you remove it, 25% to 30% is the place. Some quarter 25, some quarter 30. This quarter was 30%. So we like to remain in the 25-30% for the corridor because we have, as I said, we have a huge tailwinds arising out of the energy transition in India, both from the renewable, transmission, industries, and also rail, etc. like that. So that's where we would like to focus. It's not that we don't want to increase from 25-30 to number, but that increase is not at the cost of the domestic market. So that's the reason we would like to give the priority to the domestic market because we have created the factories and other things to address the domestic market. But at the same time, we would like to leverage our factories also to the rest of the world. That's what we have doing it. 1/4 of what we produce, we export it. Maybe over a period of time, it might increase slightly on this.
Also, sir, with the new capacity coming, what sort of incremental capacity are we having, let's say 50%, 40% of What sort of...
It is varying. As and when we complete the capacity, we'll inform you. At this point in time, it is varying, depending upon the products what we have taken. Some are going from 40% increase, some are going 50% increase, some are, even close to what we have it. So it is varying it, but we will inform you as and when the capacity comes up.
Just last one. With the current margins that is going on, and with the parent higher than the parent margin, do we see this margin to sustain and royalty percentage also?
So we don't want to compare higher than the parent or lower than the parent. What we compare is our portfolio, what we have, and our cost structure, what we have in there. So that's what we are saying. So again, I'm going back to a couple of years. We said we are building a company in a fairly medium-term, long-term basis. We are not taking short things going up and down in that. So we said that we will reach 10% of our operational EBITDA by FY 2025, and then we have reached much ahead of that curve. And then we said we'll sustain those margins. Again, we are working towards that in that. While sustaining it, of course, depending upon the market condition, depending upon the various other geopolitical, etc., we will always try and see how to improve on that. But otherwise, our thing is to double-digit EBITDA. Thank you.
Thank you, sir.
Yeah. So maybe my.
Thank you very much.
Yeah. Last comments. Once again, thank you very much, ladies and gentlemen. Thank you for your time and listening to us and engaging with us. We are in such an energy super cycle, very exciting for us. And future is going to be electrified, everything and anything. And that's what we are seeing, gigawatt scale of data centers, and many industries are looking forward. So we are really very, very, happy and want to, further increase our engagement. If you need any further information, please do not hesitate. Reach out to us, reach out to any of us, and we will be happy to do that. And any unanswered questions, if we are not answered to you, also reach out to us. We will be happy to engage with you. Thank you very much.
Thank you very much. On behalf of Hitachi Energy India Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.